Welcome to ThinkTech on OC16, Hawaii's weekly newscast of things that matter to tech and to Hawaii. I'm Jay Fidell.
And I'm Alisa Onishi.
In our show tonight, we'll cover the Tourism in Hawaii program, presented by ThinkTech and the Hawaii Venture Capital Association at the end of February.
It featured 10 experts in tourism who helped us understand the nexus between Kalakaua Avenue and Bishop Street and how tourism can connect with tech. It featured 10 experts in tourism who helped us understand the nexus between Kalakaua Avenue and Bishop Street and how tourism can connect with tech.
There were two panels. The first panel dealt with new industry and government directions in Hawaii tourism. The moderator was Rick Egged of the Waikiki Improvement Association, joined by panelists Greg Dickhens of Kyo-ya, Rob Solomon of Outrigger, Rob Stephenson of the Molokai Chamber of Commerce, and David Uchiyama of the Hawaii Tourism Authority. Had a warm welcome for Rick Egged.
Yeah, we're going to put David on first, and he'll talk to you a little bit about what HTA is doing and what the market looks like, and then I'll pick up where he leaves off.
The meetings, convention, and incentive business is really the foundation of the industry, and being able to put that backlog or future bookings on the books is going to allow us to better revenue manage both the hotels and the airlines together. And I think that's something that we really need to work on. Currently, we see a cycle in place, years ending in 4 and 5 and 0 and 9. Are years that these major conventions cycle into Hawaii, and those are the years that we start to peak. So right now in 12 and 13, historically this would have been a very slow period for us, but because of all the activities that are going on with airlift, it stimulated the markets. And just some examples would be like what we see happening in Korea, with Asiana coming on board, where Korean and Hawaiian were in the market. Asiana really is a true competitor to Korean. So we're going to see some fair opportunities that are going to, be beneficial to the consumer. Well, I think one area that we're focusing on is the workforce development. I really feel that we haven't aligned our educational system with the industry. And it's really tying to the community and getting the communities to better understand the tourism industry. But if you look at our high schools to either your community college and the university system, we don't have the cohesiveness in driving that education all the way through.
And I think it's important to remember is that David is the marketing guy. They're paid to be optimistic. But I've been asked to, since David just barely touched on some of the numbers, to give you a little bit more of an overview as to where we are, where the visitor industry is now, and obviously it's in a good place. We've had $12.6 billion in expenditures. Okay, 7 million visitors last year, 7.2 million visitors, and visitor days actually was up about 5%, and total visitors about 4%, which means the length of stay was up. These are all numbers, of course, that have all come out in the paper, but I think that the overall impact may not quite sink in, but it certainly was a good year from the standpoint of the overall visitor industry being able to generate money for the economy. If you divide up all those visitor expenditures over the entire population of the state, came to $9,127 each.
We're here to talk a little bit about tourism post-APEC, and just a few comments on APEC. It was an incredibly successful event, went on without a hitch, and really positioned Hawaii and Waikiki in particular as a great destination for business meetings, conventions, really what we need to do to change the market segments in Waikiki. Randy Tanaka is here today. He oversees the convention center. He was an integral part of that process and just did a really tremendous job. APEC really did position us to change the market, as I mentioned, and to go after this higher rated Asia Pacific customer and go after higher rated convention and business oriented meetings. In order to do that, however, we really need to improve the product and continue to improve the product to make sure that we have the types of hotel rooms, the types of facilities and recreation opportunities that the Asia Pacific customer wants and get in other places like Phuket, Bali, even Maui and the Big Island. Fortunately, over the last 5 to 7 years, we have had major reinvestment in Waikiki. As Rick mentioned, over 10 years is about $3 billion. It's a couple $1 billion over the last 5 to 7 years. You saw what Outrigger did with the Beach Walk project, really a tremendous redevelopment with a lot of retail, food and beverage, and timeshare uses. You know, Trump, just adjacent to the Beach Walk project, built a really spectacular condominium project there.
As far as technology and hospitality and the future of all the above, along with investing in the product, technology is a really big part of our business. And whether it's the airlines or the rest of our distribution or the online space where most of our visitors now do their planning and many of them do their shopping, we have a really big commitment to technology. And technology, anyone that follows it, you know, the acceleration is accelerating, so we have big data, we have tremendous complexity, and it's very stimulating for our business. That's the good news. The bad news is that we can't meet many or most of our needs to support that technology here in Hawaii. It's got part to do with our education system. It has part to do with the infrastructure that we have around. We started our first website in Hawaii with a Hawaii-based company that shut itself down about 10 years ago because it couldn't keep up with the needs of its clients. We went through a series of RFPs in the last couple of years for major technical work in several different areas that where you need to perform to be competitive in today's global environment. And all of our bidders were not from Hawaii. We didn't even have qualifiers.
But let's take a look at tourism on Molokai. Let's define it. And according to Hawaii Tourism Authority's most recent stats for December, Molokai is well, all the islands show an increase in growth, visitor growth, and spending. Molokai arrivals are up 14%. That's the highest in the state, but their expenditures are a 5.4% increase, which is the second lowest in the state. And for comparison's sake, let's use Lanai. So Lanai's growth rate is up at about 12.4% increase, but their expenditures are 27% increase. That's almost 5 times more than what we have on Molokai. So this data tells us the positives. It shows that we have potential for visitors in Molokai. People are more curious, more interested, and that opens up opportunities to increase the general excise tax, to create more jobs, to help counter the unemployment, which is 13.9%, the highest in the state. Those jobs will increase spending within the community and in turn create more jobs. The negatives that we have on Molokai is our infrastructure. We only have 400 beds that are available on Molokai at any given time. So our maximum capacity at any given time, you've only got 5% of every person you see is an overnight visitor. So the cost to get to Molokai is about $200 by air, average round trip, and $80 by ferry, but the ferry only comes from Maui.
The second panel dealt with new directions in tourist services, events, and attractions. Our moderator was Allison Schaefers of the Star-Advertiser, joined by panelists Mike Carr of the Battleship, Missouri, Chris Resich of Mary, Charles & Associates, Randy Tanaka of the Hawaii Convention Center, and Susan Todani of Kamehameha Schools.
You know, as some of the panelists in the first presentation talked about, I'd say that 2011 was a pretty decent year for Hawaii tourism, and that there were plenty of opportunities for the state's services, events, and attractions. The year-end visitor statistics taken at face value meant that, you know, in short, more people came to Hawaii in 2011 and that they spent more. Total visitor arrivals grew by 3.8% last year and rose in all major markets except from Japan. And that was kind of expected given the incredible tragedy that we had endured. Visitor spending rose to $12.58 billion, which was the second highest level of visitor spending in the history of tourism to the Hawaiian Islands. To be sure, the increases in bodies and in spending bode well for the businesses that make up this panel, the services, events, and attractions segment of Hawaii. However, as we've seen from the fallout of the March 11th earthquake and tsunami in Japan, tourism is a very fragile business. It's highly vulnerable to oil prices, natural disasters, economic conditions, societal perceptions, changes in technology, and to the ways that people do business and book travel.
The Battleship Missouri Memorial, as we are properly known, and I need to state this because even Jay was a little confused about this, is a not-for-profit 501c3, a Hawaii corporation that is not affiliated with the Navy or the federal government officially in any way. We do not get any funding whatsoever from the federal government for our operations. We do, from time to time, as most nonprofits do, go out and prepare grant requests, usually for specific capital projects. The most obvious one of those was when we took the ship into dry dock a couple of years ago and were the recipient of a couple of DoD earmarks. Our timing was spectacular because if we were doing that now, we would really be in trouble. So our timing was very, very good. We are affiliated with the other Pearl Harbor historic partners, which include the BOFIN and the Pacific Aviation Museum, like us, 501c3 nonprofits, as well as the World War II Valor in the Pacific National Monument, known to most of you as the Arizona Memorial, which is operated by the National Park Service. Because we don't get any federal funding, we have to go out and raise all of our own monies through our fundraising and development efforts, but also primarily through our gate and all the people who come and visit us each and every day. Last year we had a very good year. We ended the year with just under 450,000 paid visitors, which was up about 5% for last year. But interestingly, those numbers kind of bounced around and were less than the previous year for most of the year until we hit the latter part of the year, and then something happened which I really can't explain.
MCNA, I guess not many of you know our company. We are the largest destination event management company in Hawaii. And actually we are in the top 5 largest companies in our business in the US. We are in 3 lines of business. The largest is the group and incentive and association market. The second one, and in that market we have about 50% market share. The second one is the leisure business. We handle all the vacationers coming on vacation packages to Hawaii, and our clients are companies like Expedia, Orbitz, American Express Vacations, a number of them. And then we also handle cruise lines. We handle about 80% of cruise lines in Hawaii. So we have a very diverse product, and we touch a lot of tourists, vacationers, and tourists and corporate clients coming to Hawaii. And of course, what's happening in Hawaii is extremely important to our business. And there are a few things that that definitely are changing and impacting our business and all of our lives.
The market is so dynamic now. Things are changing at tremendous rates. Our delegate that comes to a convention at the convention center, a good portion of them are first-time visitors to the state of Hawaii. What has grown in the last 4 years is a strong international mix. About 5 years ago, my associate Jun Matsumoto and I set out on a path to use Asia as a magnet to get the U.S. associations to Hawaii. We would be the doorstep for them to really interact with Asia, and we developed she developed a global outreach program that helped U.S. associations and like associations in Asia, for example, the Japan Dental Society meet with the American Dental Association. So we've been on this path for the last 5 years, and it's been quite fruitful for us. And along comes this little thing called APEC. 21 leaders in the fastest growing economies in the world, and we get a chance to showcase Hawaii as a great place to meet. Never will the stars align the way it did, where we had a president and a senior senator and an opportunity once in a lifetime to bring a significant meeting to the state of Hawaii.
I'd like to talk about really revitalizing great places. And in this case, it's revitalizing great streets. And this really goes to the heart of reinventing the visitor plant and the visitor experience. So one of the projects that I'll talk about is Royal Hawaiian Center. And it was really the first development project that Kamehameha Schools had done in 26 years. But since that time, we've had a series of 8 projects in Mo'ili'ili, in Kakaako, in Windward Mall, and now in Haleiwa. So I think, there's a lot of good energy, a lot of enthusiasm, and really a lot of stewardship that's being paid attention at Kamehameha Schools. So for the first project, Royal Hawaiian Center, when we looked at it, we really looked at the context of the place. And what this old building did was it dominated the place. It was a brutalistic structure, didn't relate to our neighbors, didn't relate to the environment, turned its back on the Sheraton and the Royal Hawaiian. And so everything that we did was really to overcome that.
As you've seen, both panels were great. At the end, our own Bill Spencer spoke for the investors and entrepreneurs and provided an important perspective on the connection between tourism and technology.
We're all counting on those Chinese, and yet, I know there's Japanese speakers in every hotel and shop in Waikiki, but where are the Mandarin speakers? Do we have enough? Are we going to be able to handle the Chinese and keep them here and make it sticky for them? I sure hope so.
I thought it was a really great mix of people, to have the Waikiki community come into downtown Honolulu, and a lot of times those two industries don't really meet. So, to see how we can collaborate in the future, and maybe it's technology, because we don't do everything in technology. We don't know that area. We don't know that industry. So I think it would be great, to have capital and the expertise in the visitor industry.
Well, I thought it was one of the better ones that you've ever done. I appreciate it. Both good moderators and a good panel, and I learned.
I think the collective pool of energy, rather than just kicking the can down the road a little bit further, if we can pull and synergize with all this, I think we might be able to do some good.
This is a fantastic program. The way that you guys bring the venture capital community together with the tourism industry seems like a perfect fit, because we know that partnerships work. We have to work hand in hand with the business community, with the government, with the private sector. All of us need to work together to drive the vibrant tourism industry, which is one of the main financial platforms that we have for the stability of our state.
They held on every single point that I was expecting to hear. One great thing is that they all talked about how to drive growth for business, but also how to try to drive growth for their communities and how to build what we have here in Hawaii and try to make it better for everyone. So I think that was great.
Oh, I think it was great. I think that that's what we really need here in Hawaii, to have our best industry combined with our technology guys, with the investment guys, so that we can build a better product for the tourism going forward. So it was terrific.
Oh, a terrific program. And for me, it was a great perspective on what's coming. In fact, there were a lot of surprises. So I'm glad I came. I'm not a professional tourism person, but the information was really informative and kind of helps me set a perspective on what we need to do.
Helped me as a decision, policymaker to hear again what we need to hear. And maybe I will actually go back and see if we have time to draft a resolution to bring technology and tourism together as was suggested.
It was great. It was wonderful to share a few of my thoughts and to get some takeaways from some of the people I work with on a regular basis.
The program was notable in that it offered Kalakaua Avenue a chance to meet and exchange ideas about the economy with Bishop Street. And only good can come out of that discussion, and the collaboration hopefully to follow. Now for our ThinkTech calendar of events going forward.
ThinkTech's 4 to 5 p.m. weekday drive time radio series on KGU 760 AM continues this week, covering business, Asia, technology, energy, the arts, and government. Tune in at 760 AM every weekday at 4 p.m. and raise your awareness on ThinkTech Radio.
On March 22nd, the Hawaii Venture Capital Association and ThinkTech will present a luncheon panel program called Finding Our Future in Kakaako, a look at all the projects and prospects in Kakaako today. Sign up for these programs on hvca.org. And now here's Bill Spencer, president of the Hawaii Venture Capital Association, with this week's Spend Station.
Well, I live there, Jay. I've lived there for 20 plus years now. And with the exception of just a couple of condos, it's a mishmash of World War II Quonset huts, old deteriorating warehouses, streets with huge potholes that never get attended to, and a fair number of homeless people. We've seen little activity over on the Mackay side of Ala Moana Boulevard with the medical school, of course, but that whole dream of Ed Cadman's biotech center, a hub for technology businesses, never materialized. The cancer center has been sort of put into the medical school's back lot. When you think about the bigger picture, where can Hawaii's business community grow? I look at this as an opportunity to create what I would call downtown East. You know, there's so much potential for things other than, you know, auto body workshops and upholstery places and car wash places, you know, transmission repair. That doesn't need to be in the center of a thriving metropolis. People really need to get with the program and start helping shape the future of kakaako. I mean, that's the job of Hawaii Community Development Authority, who've gone through many plans. As we know, the big landowners there, Howard Hughes, Kamehameha Schools, Alexander and Baldwin, are all scheming to, you know, build condos and maybe create a live, work, and play environment. But it could be another 20 years before that vision is realized if we don't really start focusing on it today. Well, they're supposed to do mixed-use development. Anybody that gets the right to build a condo is supposed to compensate with some lower-income housing.
I hope that works.
And we've seen that. The latest project that HCDA has announced that the governor supports is anchored by a 65-story super tower. It will exceed the height of any building in Honolulu. You know, I think of Shanghai looming.
Yes, that's what it'll be.
And of course, it's going to attract the usual detractors who will be worried about noise and traffic, which isn't inconceivable.
Theoretically, it'll allow for green space.
Well, that's the whole point of building up instead of sprawling out.
Yeah.
And yet, that's where the rail is supposed to go through, right through the heart of kakaako.
Yeah.
It's going to be incredibly disruptive.
Well, we took a little tour a week or two ago. We talked to some of the artists who were doing the murals there, most of which have been finished since then, and they're very nice. And the artists were so vital. They were so now. They were you know, a statement of where Hawaii should be going. And I think that gave me a different feeling about it all. So you see coffee shops and murals on the walls and small businesses and co-working. There's a new vitality there, and KS, you know, is encouraging that, at least for now. So you say, well, maybe there's hope in kakaako, and that's what we want to explore in this program, Bill.
It's going to be another great program, Jay.
Hope so. Let's work together on it.
You bet.
Thank you, Bill. And here's our co-working entrepreneurs, Richung Fujihira and Tony Stanford, to keep us current on their latest adventures at the Box Jelly.
One of the things I'd like to talk to you about is the unconference, is something that I've just been able to slip away from, is something that is an open event that really helps curate the technical community in Hawaii. The Box Jelly team attended it last year, and it was something that was really one of the turning points of knowing that Hawaii could take full advantage of co-working And so with this year, there was a whole session dedicated to the concept of co-working alone, where there was about 30 to 40 people plus that attended it. And that's something that's truly exciting to see, really teaching the community about the concept of co-working and how it could benefit them. This is going into something that we've really been working really hard with this week, which is customer acquisition. And what do I mean by that? We've been working with expanding our clienteles, our branding, and marketing. With expanding our client base, we've been really working really closely with the business travelers. We had a couple people from LA that reached out to us that needed a place to work, a couple of graphic designers. And so we went even as far as getting them a hotel room and everything set up for them. So when they came in, they came and dropped their luggage off at the hotel room and came straight over and started getting working done, which is really exciting. On the other side of that spectrum, we've really been working with the local hotels. One of the ones that we talked to this week was Hotel Renew. And we're really looking to provide all their conference room needs so they can really support the business traveler. We accomplished a lot this week, but I'm looking to do more next week. So please stay tuned. The Box Jelly, a place to work, a place to meet, a place to build. Work the way you live. theboxjelly.com. Thank you.
We'll be right back to wrap up this week's edition of ThinkTech. But first, we want to thank our underwriters.
Thanks to the Scheidler Family Foundation, which supports a number of educational, cultural, and charitable organizations, including ThinkTech.
Hawaiian Electric Company and its affiliates Miko on Maui and Helco on the Big Island are deeply committed to the communities they serve.
Galen Ho is a senior executive of BAE Systems, a global defense, security, and aerospace company, and CEO of CBI Polymers, a tech company in Hawaii.
Don't forget ThinkTech. Please help us out by making a contribution on thinktechhawaii.com. It'll help us with all the things we do to raise public awareness about tech, energy, diversification, and globalism in Hawaii. Thank you very much.
Okay, Alisa, that wraps up this week's edition of ThinkTech. Remember, you can watch ThinkTech on OC16 several times every week. Can't get enough of it, just like Alisa does. For additional times, check out OC16.tv.
You bet, Jay. For lots more ThinkTech videos and for underwriting and sponsorship opportunities on ThinkTech on OC16, visit thinktechhawaii.com. Be a sponsor or a volunteer and help us reach Hawaii.
I'm Jay Fidell. Thanks so much for joining us on ThinkTech.
I'm Alisa Onishi. Aloha, everyone.